Okay, virus-free and COVID-proof. Hope you are as well. So stay safe and healthy wherever you are. Shubham Agarwal, CEO and Head of Research at Quantsap Advisory, joins us now to give us his view on some stocks and the market itself. Shubham, hi, good morning. Considering that it's been volatile and slightly on a downtrend, what are the stocks that you'd be looking at today and which way are you leaning?
Hi, good morning, Sonia. So certainly the market is showing signs of weakness where after a long time we can see that the medium-term indicators are turning negative, and especially from the financial space. But today I have a mixed trade, so 2 sell and 1 buy idea. So obviously on any pullback, the market will have opportunities to go short. So the first one is a sell on HUL, and if you look at HUL, since a long time the stock was consolidating, and recently we saw that there's a breakdown on the chart. And the derivative data is also suggesting that there are minor shorts that are getting built, which can be carried forwarded to the next series. So a bear put spread can be initiated where the trade will be to buy a 2000 strike put option and sell a 1940 strike put option. And this is for the October series. The spread cost right now is at 20 rupees 50 paise. We are looking for a spread target of 32 with a stop loss at 14. The second call is a sell call on ONGC, and ONGC on the long-term chart has been one of the underperformer. And recently we saw that some continuation patterns were formed from where we have seen a breakdown. And especially on the derivative data, since the entire September series started, the stock has been witnessing massive shorts on the derivative data. So looks like that this weakness will continue. So a 70 strike put option for the October series can be bought for a target of 5.5 with a stop loss at 2. And lastly, a buy trade on TCS. IT has been doing well, and that can continue to at least relatively outperform. So a bull call spread can be initiated on TCS, where the trade will be to buy a 2500 strike call option and sell a 2540 strike call option. The net spread cost is at 15 rupees 70 paise. We are looking for a target of 28 with a stop loss at 9.
Okay. Thank you very much, Shubham, for your trading strategies. Have a great trading day and week ahead. Okay, we are now shifting focus to the NBFC space. As we already told you, the stock on our radar is Repco, and one reason to invite the Repco management is that CARE Ratings has revised their outlook on Repco Home Finance's liabilities to stable from negative. Yashpal Gupta, the Managing Director and CEO at Repco Home Finance, joins us. Good morning, Mr. Gupta. Thanks much. Well, if you can first take us through what is the position in terms of liabilities at Repco, what are the payments that are due, and are you provided for it for the next 12 months?
Absolutely right. We have provided for payment for at least 1 year next. The payment for next 1 year is close to 2,000 crore. And as I told in the last interaction, we have already prepaid some of the loans. But now we are prepaying some of the other loans. Then we have more than 2,000 crores of undisbursed loans. We have 300 crores of on-balance sheet liabilities. There is absolutely no problem with the payment at all. Not only 1 year, probably we will be able to meet beyond 1 year. In fact, the many banks, the top banks of the country, their senior management is asking us to draw more money. But we are saying, what do we draw? Where do we utilize?
But Mr. Gupta, all the rating, all the instruments, long-term bank facilities, non-convertible debentures and non-convertible Series 3 have all been downgraded from AA to AA minus. Why that?
Yeah, that is even it has taken to us also by surprise. Probably we have represented to CARE. Probably they look into that, but I'll tell you some of the key factors that are important. They have probably gone more by the industry than the company. Okay. They have gone by in which sector is the problem. If you see, I'll just tell you a March to March comparison 19 to 20. Even if you take out entire NPA, our capital adequacy ratio has gone up from 19.5% to 20%. Okay. And our debt
Okay.
So all the ratios are good.
Okay.
We don't see any reason for downgrading. In fact, we were hoping for upgrade.
Oh.
We have taken up with them. Hopefully, they will reconsider. Okay. But otherwise, we want to assure you that there is no problem at all.
Okay. So, Mr. Gupta, just some more numbers if you can share with us on this asset liability management itself. What is the total unutilized line of credit that the company has up until, say, September? And what are the prepayments that are being assumed per month? Is it lower than what you've seen recently? I mean, if you can just share those numbers.
Okay. So one is that the undisbursed loans, as you know, they keep on changing because banks sanction some loans regularly. But even now, as of today, as I speak, it is close to 2,500 crores. 2,500 crores. And some of the big banks like SBI, Canara Bank, they are part of the Bank of Baroda. They are part of that. The liabilities maturing 1 year is only 2,000 crores. Now the regular repayment is about 70 crores.
It's about 70 crores.
70 crores principal, 90 crores interest, so about 160 crores per month, plus about 100 crores of prepayment. So we are getting 250 crores of cash inflow per month. But even if prepayment is zero, we expect to get 150, 160 crores of repayment. That is 70 crores of principal and 90 crores of interest. The disbursement as of now is normally our disbursement is 3,000 crores per year, some here and there. So 250 crores per month disbursement happens.
Okay.
But as I told you, right now we are at 50-60% of normal capacity. So disbursement per month are about 150-160 crores.
Okay.
Then our
So, are you, Mr. Gupta, 1 minute. You said that your repayments in a month are usually 250 crore, 90 crore, 60 crore principal, 90 crore interest, and 100 crore prepayment.
Yeah.
What was it, say, pre-COVID in February, etc.? Have the monthly inflows dipped? If yes, how much?
In fact, monthly inflows unfortunately have gone up because banks have become very aggressive. Prepayments are only before COVID was 70-80 crores. Now it has gone up about 200 crores. So 20-30 crores increase has happened.
So no moratorium demands?
No, I'm telling this was the after moratorium because in the first phase we gave moratorium to 85%. Their cash flow dipped, no doubt. We did not avail moratorium for banks, but we gave to our customer. In the second phase, moratorium was only 35%. Now, 65% was coming to 150 crores. 65% was about, say, you can say 90 odd crores was coming from prepayment.
Okay.
And then from this month, again we expect it to go back to 150 crores.
Have you seen any signs? You know, you said that 35% availed of moratorium. How are they behaving? Are they asking you to continue or will they pay back? How will you treat them?
See, as of now, our people are in touch with them. It is the September month, so first month after moratorium is over.
Yeah.
We've already done recovery to more than 50%. In all our cases, we have last date of the month as a payment date. So still 10 days are left. We'll know, but we are hopeful that recovery efficiency will go up to more than 80% in this month itself.
Okay.
Then
You don't worry,
So
they will
recoveries
become
will-
NPAs. Those will not be marked NPAs right now, right? You will give them 90 days.
Yeah, anyway, as you know, as per RBI guidelines, RBI circular, we can restrict some loans. So we are expecting some restriction will happen, but we don't expect a huge surge in NPA. Maybe 4 will become 4.5, but we don't see a huge surge.
So that's the overall NPA. You're saying 4 will become 4.5. But if you look at the two categories where your NPAs are rising, one is the non-salaried category where it's all 6.5% and loan against property category where it's also about 6.5%. In these two pockets, do you see a further rise in NPAs?
I mean, there is a risk involved, but we are conscious of that. That is why we are bringing down portfolio. If you see in June, again this non-salary was 51.6, which used to be close to 56%.
Okay.
So we are bringing down, number one. Number two, one important thing which I want to tell, the credit loss. In last 20 years of our company's existence, we written off or waived principal of only 10 crores.
Okay.
Is total disbursement of 20,000 crores. So even now when they negotiate with the customer, it is only waiver of interest and other charges.
All right,
Not
sir.
on the principal at all.
Point taken, sir. Point taken. Thank you very much, Mr. Yashpal Gupta, for joining us with those details. About